Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, March 14th, 6:17 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Late start tonight, had a bunch of trades to allocate after the close and some chart review that took a little bit longer than necessary. Today, possibly a critical day in the market, despite the fact that the S&P and the Dow and the Nasdaq 100 didn't really look like there was much to be concerned about by the final numbers, but the actual action under the hood seemed not as healthy as we would like to see as growth investors. Let's get to it. So, state of the market, we're in an uptrend. You can see the four green arrows over there, but we've brought back the yellow arrow for market leaders, several breaking the 21-day moving average today. Short term, also the yellow sub arrow because small caps broke the 21-day moving average today. The rest of the indexes are above their short-term 21-day moving average, and all five above the medium-term 50-day and long-term 200-day moving average. So what's to be concerned about? Well, before the open, producer price data. This is a measure of inflation for producers. If let's just say if the producers are having inflation, they have a choice to either eat it or pass it on to consumers. We've seen consumer inflation tick up a bit. Now we're seeing producer inflation tick up as well. Didn't really hit things pre-market. We opened up slightly higher, but within 15 minutes started to sell off. Had three big waves down during the day. Growth leaders got hit, mid and small cap got hit very hard. Seemed like a change in character from what we've been seeing. Here are the numbers on the day, and the Big Seven masked a bunch of what was going on. Remember, these are stellar balance sheet companies, and they're seen almost as a flight to safety when growth gets out of fashion. Uh, five of the seven up today. Remember, we don't count Tesla. Tesla was down 4%. We have been using Netflix as our seventh in the Big Seven because, frankly, Tesla looks like garbage and has been acting like garbage and continues to act like garbage. NVIDIA, after some big volatility last week, volatility came back into here again. NVIDIA and Meta were the only two that were lower today. NVIDIA down 3.2%. On average, the Big Seven up 0.5%. And this masked some weakness in the big cap indexes, which are heavily weighted to these names. Look at the RG8, compare that to the Big Seven. RG8 down 1.51%, all eight of the components lower, the worst being ARK down by 3.2%. FFTY, that's the IBD 50 down 1.5%. Not what we want to see from growth leaders in any way, shape, or form. S&P 500, with a furious rally the last 30 minutes, managed to be only down 0.29%, but was down 0.5% more than this. Equal weight, not good, down 0.9%. NASDAQ 100, again, shielded by the big caps, shows only down 0.25%, but equal weight down 0.7. Dow Jones Industrial Average down 0.35%, mid caps. And here's where the problems start again. Mid caps down 1.3, Russell 2000 down 2%, Global 60/40 down 0.44. In-house GROTECTION are underperformed versus the big indexes, and it was the leading names that we own that got hit that caused it. So this is why our process is come in every day, monitor, have our focus list ready, monitor the open 30-minute range, see how the market reacts to that 30-minute range, update our stops between 10 and 10:30 based on what the moving averages are showing, and observe our stops periodically throughout the day and observe what leading stocks that we don't own are doing. And it was cause for concern today is what I'll say. So let's go to the S&P 500. We'll start off here. I mean, this just looks like a normal day. Go to a 5-minute chart, mild open, open positive by about 0.2%. And then here's the immediate sell off at 950. You can see in 5 minutes we dropped almost a 0.5%. Bounce, another wave down, a bounce, another wave down, and a bounce into the close. So you can see we went from 51.23 all the way up to 51.50 in these last 20 minutes. When volatility picks up like this, that's also something to be concerned about. Undercut and reclaim the ADMA again, and the 21-day moving average has continued to be support for the NASDAQ 100. You can see it's bounced there 3 of the last 8 sessions. And bounced there again today. You can see the relative strength starting to wane in this, despite the fact that the Big Seven pumped this up a little bit today. Let's look at the equal weight indexes very quickly. You can see QQEW breaking the 21-day moving average. And how about the equal weight S&P 500? Below the 8, still above the 21. Onto the Dow, a defensive index. Bounced at the 21-day moving average onto mid cap. Under the 8, still above the 21, but small caps, no bid today, closing below the 21. Bounced at this key 200 level, and that's fine for now. Below there is the 50-day moving average, but breaking the 21, and this really looks like a failed breakout from last week, all the way up to 210, and then in 5 days dropping 5% from the high of the day to the low of today. So not what we're looking for. And we'll see what tomorrow brings, but we did get defensive today, sold a number of names, combination of some offensive selling, but mostly defensive selling. Let's go to the VIX. The VIX, you can see the long bar today, still below that 15 level, but back above the 21-day moving average. And again, volatility creeping into the picture today. This is the problem. The dollar, I'm going to bring in the stochastic. One of the things I was doing after hours is comparing the last time we were oversold like this on the dollar and started to bounce. Each time it was at minimum a headwind, at worst acting like a boat anchor against the indexes. And this is where we are again, hooking back up. This looks like this candle here from the 8th. Last Friday looks like a shakeout and then a morning star-ish pattern over the next couple of days. Strength in the dollar, not good for stocks, not good for precious metals. Generally not good for commodities, but certainly didn't hurt oil today. So speaking of the precious metals, here's gold. Not bad, but it holding above the 8-day moving average, which is a normal pullback down 0.42%. GDX has been holding up better than the metal because you'll notice yesterday it made a higher high, GLD did not, and today's close is still quite a bit above where we pulled back on Tuesday, still down 1.32%. Silver, just down a bit, 0.26%. Bitcoin has been leading. Harsh pullback today, sitting right on the 8-day exponential moving average, down 5.6% today. So that's a little flight from risk on when Bitcoin, not as volatile as this big shakeout day when it first made an all-time high. It's made several new highs since then, but a negative reversal today, very clear there. Onto the bonds with that PPI. Bond prices down hard. Bond prices down mean yields up. So you can see the gap on BND back near recent levels. And note also it's coming off of overbought on the stochastic. If bond prices are coming back from overbought, that means bond yields are coming bouncing off of oversold, and you'll see that in a minute. Here's TLT, same thing, rolled over, gap down. Now here's the yield, the 30-year, coming up from oversold and a big move higher, up 2.16% today. TNX up 2.5% again, hooking up from oversold. So between the dollar and the rise in yields and the increased inflation data and the fact that we've rallied for a substantial period of time, and the fact that leaders, growth, and mid caps acted like garbage today. I see it as a changing character and a reason to be more defensive. And we reacted accordingly. So go to the tail of the tape here. You can freeze this. Up one C2, and that's being generous. Up one day in consolidation. And really, I'm talking about the action on the indexes, but I've detailed the other under the hood issues to be concerned about today. Seventh day above the 8-day exponential moving average as we did undercut and reclaim it, which is great. 46 straight days above the 21-day moving average and 89 out of the last 90. I know I've been saying this forever, but we won't go up forever. That much we know. So 3 waves down, bounce into the close. As far as sectors go, dollar strong, oil strong, XLK finished positive just barely, and that's because Apple and Microsoft, two of the big seven, which dominate the XLK, were up strong today. Gold and gold stocks down, regional banks down, builders down, again, because interest rates up, biotech down because interest rates up, solar down, real estate down, all these tied to interest rates being higher. So what we do in-house today, we booked some of our NVIDIA, 80% gain on it, hedged some in the taxable accounts, and we got stopped on TNA as IWM small caps broke below the 21. Bank U, we just came into this yesterday, but it was down hard today. Best trade should work right away. Still looks okay, but when things get dicey, we look at our cost basis on names, and if it's not where we need it to be, we just cut bait and regroup. A tiny loss is not a big deal. That's same situation with Palantir and RL. We'll look at these charts in a minute, but bottom line on the day, PPI hot, growth leaders and mid and small caps hit hard, change in character in the market. It's not definitive, and we still have the S&P 500 and the NASDAQ and mid caps above their 21-day moving average, but under the hood, some cause for concern from what I saw today. So let's take a look at first the portfolio. We'll start with this BNKU that we bought yesterday. That's bounced at the 21-day moving average with you're going to see several bounces, and that was because of the furious rally into the close. It's right around the top of this flat base, the pivot of the flat base going sideways. This is a nice consolidation, but like I said, when we're down slightly on something and the market's iffy, better to just get rid of it, regroup, and clear our minds. So TNA we sold, we showed IWM breaking, Ambien KU, Palantir, both underwater. I mean, negative reversal 5 days ago, down for the last 5 days, still above the 21-day moving average. But this is one that we locked up the small losses on before they get worse. Ralph Lauren, we were down to a small position in this that was down like 0.2%. Same situation. Just close it out and regroup. Now, NVIDIA, I said we booked some 80% gains in this. It went to the closed right on the 8-day exponential moving average by the end of the day. And that was with a rally into the close. It still looks fine overall, but this was just being sold hard today several times. 1, 2, 3, and look at how the volume is higher on the selling here and here, and this spike here and this spike down here. So we'll hold on to the remainder of what we have, hedge it in taxable accounts. But when the leading stocks in the market start acting, let's just say squirrely, and volatility picks up across the board, again, changing character, time to get a little bit defensive. So there's NVIDIA, AMD stop today. I did not include that earlier on the 21 over 21, but we took some offensive gains in this negative reversal back here around 220. This thing has dropped like 18% in 5 days. That's not normal action. And determining what is normal is important in the market. And this is a leading stock in a leading sector, not normal action over the last 5 days. Euphoria followed by, oh my God, get me out. And that's not what we want to see. So we booked nice gains on this negative reversal and around the 220 level and stopped on the rest of it today for about a 5% gain. What else we got? CrowdStrike, still acting fine, still above this 21-day, arguably wedging lower volume as price goes higher. Seeing a lot of that actually. Uber, we added some to this. It's holding the 21 tight leash on that last ad that we had. Didn't want to blow everything out today, but the things that we've had the longest that have made no progress or that we were underwater with is what we got rid of. Weatherford oil stocks continue to act fine. This made a higher high. Lilly held up fine today, undercut and reclaimed actually three of the last 4 days, after one close below the 21, 3 of the last 4 days, it's undercut and reclaimed the 21. So buyers are coming in, but the volume's been very low on this move back up. We are down to just a quarter size position in this after cashing our gains before. FCX, mild pullback after a nice move up yesterday in copper. Nutanix continues to hold up well, undercut and reclaim the 8-day moving average today. And then Palantir and Ralph Lauren, we showed stopped out on those. A couple of other leading stocks with some questionable action today. Coinbase breaking below the 8, 2 big days down. Square had a big move out yesterday, gave most of that back today. COHR, this is a data center stock breaking below the 21-day moving average. I already showed AMD. SMCI, still above the 8-day exponential moving average. I showed NVIDIA, not an issue there. Celsius down almost 3%, but I think that's just a pullback. Outside negative reversal, not what you want to see, but there's nothing wrong with that chart there after a nice strong run. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. GROTECTION, compound word, serve two purposes, and that's our flagship portfolio and the really at the heart of what we do here, and that's grow assets in uptrends and protect them during downtrends using sell rules. When things start to get dicey, we start to reduce exposure. That's what we did today. We'll see what tomorrow brings, but after a big rally like this, pull back to at least the 50-day moving average, which is completely normal. We haven't touched that since all the way back of November of last year. And you know, we don't want to give back what we gain. That's why we raise our stops every day to protect the gains, hedge when appropriate, and always put our best foot forward with preserving capital, risk management first, and then the gains take care of themselves in bull markets when you do that. That's going to wrap it for Thursday, March 14th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.